Ladies and gentlemen, welcome to another midday market monitor on the beautiful August 13th. Got that one wrong yesterday. But we're going to end up seeing dLocal earnings as well as new bank earnings today. I don't know if I'll be around for that. It's actually looking like it's going to be a much shorter day than usual. However, I might end up coming back on later to talk about dLocal and new bank maybe after we get those reports, like a little bit of an evening stream. Just running into some time constraints here midday. So hopefully we can get an hour or so in, and then we will maybe pop on later to talk about dLocal and new bank. I think that would be a good mix. As far as the stories that I've been following the rest of the day, however, we have a lot more of AI stories, new models that continuously get pushed out. It feels like a daily occurrence now. Gemini 3.7 has just been announced, so that's been the big one. Cerebras, however, down 12.8%. That's one of the names that's seeing the biggest sell-off. Bending Spoons as well, down 17.8%. SanDisk, on the other hand, a lot of these memory names. There's a creator on X named Jukan who was one of the initial bulls of the memory trade, and people have kind of looked to him to be one of the leading experts. There's a couple of these guys, but Jukan definitely has made a name for himself. He went publicly maybe last week talking about how the memory trade is most likely dead because of levered ETFs are just not seeing the inflows in South Korea. And so a big portion of where we ended up seeing the inflows for Samsung and SK Hynix and many of these names is just completely washed out. Now, he has since sold off a lot of those memory names and rotated them and focused on a lot of photonics names. And not like that's been a bad trade either. I mean, we have AOI and Lumentum and Coherent and a lot of these names that are doing quite well. But it doesn't necessarily mean that that spells death for memory and storage names. You have SanDisk up 16% on some of the new high bandwidth flash products that they ended up showing off. This is also helping raise up Western Digital up 8.8%, SK Hynix up 8.5%. We also have Micron up 6.7, nearly 6.8%. That's not the only thing. We also have, SMCI is up 6.6%. Remember, we have this in the draft. The draft is never over, okay? This is going to be a long-term game, but because of the names that we've picked, almost across the board, ended up showing extremely good earnings, okay? I think the only name that really missed expectations out of the companies that we ended up seeing in our draft was Vertiv. So Vertiv Holdings keeping us a little bit red, but versus everything else, we still do lead the draft versus everyone. So we're up 10.2%. Steve taking a comfortable number 2, 4.8%. I didn't like the way I worded that. Matt up 2.6%. And there's been that big spread between, I think, the top 3 and the bottom 3. So Chris, a little bit in the middle here, down 7%. Jason down 12.6%. And Amit down 13.6%. Okay. But it's still only the beginning. We've only seen 1 quarter. There's going to be another 2 quarters of real results that we end up seeing. Then by the time we get to the last earnings, we're really going to start wrapping up the competition. This competition did not start year to date. It started on June 18th. Okay. Which was a little bit of a height of the market. We almost immediately, like next day, started to see some real red selling off. So we almost started at the top. But there was still some sales from companies that, were able to be bought up. So Rubrik, this company, so freaking strong right now, up 46% just over the last little bit. Palantir up 36%, SMCI up 30%, and Microsoft up 30% as well. I don't have the biggest winners in this draft. There's a few people, Chris and Steve, that have bigger winners like Zeta and Viva Systems. That obviously are doing much better, like 50+ percentages, 57%. I think the consistency of my picks is really what's keeping me in first. There's no one else with essentially 6 different names that are above 10% and 4 different names that are above 30%. So Hopefully that leads me to continue to stay on top. But last year, that actually was not the people that won. The people that won, like even Steve, I think like 9 out of his 10 names, because we only had 10 names at the time, were red. But Micron was in that draft and it was up like 500 or 700%. It was like something ridiculous. So that's my only concern, is that in the next, 9 months, does someone pick something that just skyrockets in its earnings and completely demolishes the rest of us? I'm not necessarily someone who is looking for picks like that. There might be some names like SMCI could definitely rocket up if they stop blow drying, the stickers off of companies, company data centers and stuff like this to send them to China. They are extremely undervalued versus Dell computers, right? So that maybe could come back, but we're still up 30%, nothing to complain about. AMD greater than Nvidia. Is this Steve's chat coming in? Look at you guys. Yeah. AMD over Nvidia. Hey, AMD's doing very well. They just decided to raise $5 billion because they see an amazing opportunity. That's not because they have a lack of profitability. Their products are extremely profitable and expected to continue to grow. But yeah, I just got a report here 2 minutes ago. Cerebras is powering a new ultra-fast tier for OpenAI's GPT 5.6 Sol, delivering up to 750 tokens per second, or about 14x faster than standard processing. This tier is in a limited preview for OpenAI API customers and uses Cerebras' wafer scale architecture with 44 gigawatts of on-chip SRAM. Okay, very cool. Let's go ahead and listen to Cerebras' CEO Andrew Feldman talk about the quarter on CNBC.
Systems co-founder and CEO Andrew Feldman. Andrew, welcome back. Thanks for the time this morning.
Yeah, happy to be here. Thank you for having me back on your show.
This is your second time out as a public company. You're probably getting conditioned to the streets, I guess, craving for outsized beats and raises. How is that working its way into how you deliver results and how you communicate results?
Well, look, we guided to 194 on the top line. I think consensus was about 191, and we delivered 210. That was up about 103% year over year. That's pretty good. I think we can always do better, but that's a good start. We beat on all guided metrics, and we beat consensus on those as well. And in parts of the business, we grew at truly extraordinary rates. I mean, we really nearly quadrupled our cloud business. That's extraordinary. Other parts that were related to data center, our customers' data center build-outs, those moved a little more slowly. But we're pretty proud of the results.
Do you think there's any confusion? We had a brief discussion this morning about the gap versus core revenue and hardware specifically. Was that confusing?
I think we didn't do ourselves any favors in our communication. I think we could have done better, and I think we will do better in the future. I think we have, especially in this quarter where we went public, an enormous number of puts and takes. When you're a 10-year-old company and you go public, there's an enormous amount of stock compensation that happens. We also have a complicated business in that we pass through some of our data center expenses at low margin to our largest customer. And so what we try and do is focus on what we call core revenue, core margins, and core operating margins. And these are the metrics that allow you to compare year over year. These are the metrics that allow you to compare quarter over quarter and are less vulnerable to things outside of our control or one-time events. And we think the outlook is extraordinary. We guided to more than a tripling next year in core revenue, a tripling. We said margins would be up, gross margins would be up, and that operating margins would be up. And so I think we're pretty proud of the trajectory we're on.
Yeah, I was going to ask, because you have said before that your performance will double every year for many years. So it sounds like you more than think that right now. And I think we should also note that a lot of the semiconductor stocks did trade down this earnings season. We didn't see it with CoreWeave yesterday, but a lot of them did have big beats and still traded down, I guess, on high expectations for future guides. So is there anything sort of standing in the way of the kind of revenue growth that you're expecting on the doubling every year?
It's a fair question. I think we had a pretty good several weeks if you look at the chart. And so, I mean, it was ripping for several weeks. And I think we announced results we're really proud of, big beats across the board. So I can't give you an explanation of this behavior in the market other than to say, you know, what we can focus on here is building the fastest AI chips, delivering them to customers, and working down some of the $25.4 billion backlog we have in RPO.
A little bit better at communicating their overall story. I think that, you know, for the most part, you also just have to look at this company. They grew at about 100%. Nvidia is also going to grow at 100%. And the valuation difference between the two is just staggering. Now, that doesn't mean that in the future, Nvidia won't, you know, grow much slower and Cerebras will pick up in that growth rate. They're starting from a small base. You know, investing is not just about buying the company that produces the most profit. It's also about buying into the companies that see the most amount of change. You know, if people are expecting Nvidia to do very well, then that might already be priced in. But I mean, honestly, whenever you look at the valuation and the multiples, it looks like Cerebras is being priced in to see some pretty significant growth. And maybe it wasn't as high as what people wanted to see, or at least the forward-looking guidance. So we will sit on that. I have not made a decision on whether I want to add Cerebras onto my or into my portfolio, just sort of sitting on that. But yeah, there was another video, however, from Databricks. Databricks is a private company. They're raising more money. But I think it goes to show the health of many of the companies in the AI trade. If Databricks is doing well, it's likely that, you know, the Anthropics of the world and many of Databricks' customers are also, you know, needing them much more. If Anthropic's doing really well, then obviously they're going to need more chips. They're going to need more data centers. It means CoreWeave's going to do better. So it all flows from the top of wherever the model names are doing. And that doesn't necessarily mean it comes from frontier names, but it does need to come from some sort of token generation. Databricks is, I guess, another angle to look at that story continuously developing.
Right now, as a private company, your valuation is much bigger than theirs, but their profitability picture looks a lot different from yours. I think they're looking at 23% free cash flow margins, but you're still optimizing for growth. I mean, if you're concerned with growing things like Lakebase, does that become an incentive for you to stay private for longer? Because then you don't have to quarter after quarter ride the profitability train that the likes of Snowflake do.
No, you could also look at a Palantir, and you could say that if Databricks went public, maybe it would have a valuation that would match that. Or there are companies that have even higher multiples, right? So it kind of depends. I think the market really wants to see AI, and we've kind of really run away with AI compared to some of those peers that you mentioned. You can see that on the growth rates, right? So growth rates above 80%. Tells that story. You mentioned gross margins actually going down. Well, that's actually one of the things you see in AI. Companies that really go in and they're on the token path. The token path looks more like that. That's, by the way, why we break up our financials. We share exactly the core business where the gross margins are fantastic, and that's also growing really fast and also accelerating 6 quarters in a row. But we also share the token path, and that's just going gangbusters. And yeah, that has a different margin profile, which is the case with all AI companies. So no, I think investors across the board, private, public, crossover, are interested in companies that are on the token path and then also have a really amazing business that is sort of the foundation. Also, I would like to say, we have been free cash flow positive in the last 12 months and before that as well. So it's not like we're burning hordes of cash.
So Ollie, that sounds like an argument maybe to go public sooner rather than later. Maybe it's not such a bad time. So tell me, I mean, I know that there's the argument that some big issues, SpaceX, others sucked the IPO oxygen out of the room in 26. There's the argument that in 27, it could be Anthropic, it could be OpenAI, who knows how long they wait. Why wait? Why? I mean, with the story that you just told, why wait?
Yeah, look, the demand is insane. We just want to invest in these, like, the Genie product. All of our customers want it. They're amazed that it has all this context with the ontology and it can give it to, the AI. With the cost controls product, with the lake-based product, we just want to double down on those. I don't want to go public and then have to sit there. The markets have been really wobbly. For 3 months, it's like, oh my God, everything is down and it's going to be terrible. The other day, it's like, oh no, it's amazing. And, it's fantastic. Look, there was like one great print by one software company, and then the whole market is up 10%. And then the other day, everything's down 10%. So
how funny is that, eh? If we can raise in the private markets, why would we even want to give ourselves the headache? Like, essentially what he's saying is, we know we're on the right path. We're making the right decisions. And the sentiment is not telling the true story. Our earnings are. And so we don't need to go public if we can raise privately at higher valuations.
It's just very turbulent times. So I think during big transitions like this, it's good to be able to just focus on your business. If there is so much demand, just build for the future. We will be public. Yes, you're right. You've observed that, we're paying attention to, margin profile, cash flow, all that. That means we want to be a public company. We're not just a company that wants to stay in the private. But right now, I just think there would be too much distraction in the public market. We will go public, I promise.
It sounds like perhaps, and don't let me put words in your mouth, you never would, that the shadow of 2021 is hanging over 26, 27 a bit. I mean, that's, if I recall, when Snowflake, when maybe, let's see, a firm, I've seen some of these companies went public, and it was really volatile. And on the comparisons, they really paid. Is that what you're trying to avoid?
Yeah, look, I would say that's definitely in the back of my head. It affects things, right? And seeing that story, how it paid out. Like in 2021, people were like, so excited, and it was like nothing. And then in 2022, it's like the opposite. And just the kind of backlash and back and forth, trying to avoid that. We have the capital right now. We want to build for that future. We are going to go public. So then the question, of course, the natural question is then when? Maybe when there's a little bit more stable waters, calm waters, where there's a little bit of more stability and predictability, we will go. And, I guarantee that.
And also, if you can wait on that, then it affects your secondary offering. Like if you want to, or initial offering, initial public offering, then they make a lot of money. So I saw someone comment and say they're overvalued and they know that. That's when you would want to go public. The goal of going public is not so then other investors can, trade on your stock. That doesn't really benefit them nearly as much as them potentially raising billions and billions of dollars in the largest liquidity pool. So if they were super overvalued, like potentially SpaceX getting a $1.7, $1.85 trillion valuation, that's the time to go public. You raise $85 billion. That's the best opportunity. Yeah. Okay. That's when you have to show your balance sheet and your valuation might come under question. Well, the investors that are still betting on their company get to see their earnings. Like they have pitch decks and everything. They're not going to, not know what their cash position, revenue, profitability is right now. Of course, they're already making those decisions. They just don't have to make earnings calls and presentations every quarter and, constantly come out to defend and come on CNBC and do all this sort of stuff. So they can kind of build in private, like what Stripe has done. If they're perfectly profitable, why did they need to go public? Okay. Fishy. SMCI tactics? No, the SMCI. SMCI is fine. Private companies, I mean, you guys are legendary trolls. It's actually impressive. Databricks is raising at like $180 billion valuation or something. It's like these numbers, I think, get so inflated that, you know, you can kind of brush it off, but it really wasn't that long ago where like $180 billion was the biggest company on earth. like, I mean, truly not long ago. And by the way, it was 190 billion. And now it just seems like the everyday company is, you know, multi centabillion corn business, centacorn. Like, it's unbelievable. We're almost at $200 billion on Databricks. Now, it does make me wonder for a company like Nebius, which, by the way, did not get the happiest of news today. So that's bringing the stock down. We'll talk about that here in a minute. But they do have a large percentage of ClickHouse, but 25% of the overall share. They have not raised in a bit. And yet companies in similar veins like Databricks is continuing to raise. So their valuation got brought up to 190 billion. ClickHouse still at 15 billion. Now, they're not equal in the services that they offer, and they're not equal in the, you know, the current size or the amount of clients, but obviously it goes to show you how much the valuations have been raised over the last year, just since January. Okay, so what happened to Nebius? Great question. Nebius came out on their earnings call and talked about how they're switching over to Bloom Energy, and that is how they are going to get around the first stop construction order for their data center, which they do not want to get delayed. That was a big concern. They addressed that during the call. They just received the second stop construction order this week over permit issues. Okay. Data One says that the pause is temporary and should not affect the project's timeline, but investors are still a little bit skeptical. They don't want to see this type of story. So hopefully it gets back on track, doesn't actually affect the company, nor is it a nail in the coffin or anything like this. It's not down that much to even remotely suggest that. It's just not a green day whenever you compare it to, you know, raising up to $275 a share earlier today. Like, that was an amazing start of the day. We're like, okay, we are going to see another massive, massive day. And then we lost that as we found out that news. Okay. CoreWeave, however, also selling off, but did have another really good start to the day as well, reaching up to $117. It's quite interesting, right? Like CoreWeave 117, Nebius 275. These are starting to get, especially on the Nebius side, like that's really getting close to all-time highs. CoreWeave's a little bit far away from all-time highs at 185, I think, 187. So, yeah, we still got a little bit of ways to go for CoreWeave, but they are doing such amazing things. And I think next quarter, if they can actually prove out that higher amount of revenue guidance and then hopefully even smash those numbers, if they can do more than 150%, I think that's very, very exciting for that company and will reinvigorate people's optimism about the company. By the way, I wanted to cover this. Yesterday, we talked about, I put it in my video because it happened after we recorded. I want to show you guys this. We showed off, it was, I think, 150% growth. It might even be higher today. Let me go ahead and see if it's even higher. And then we saw 190% growth for the next quarter. So 2 quarters from now, over the next 6 months. I checked it then last night, and I'm going to check it right now. Is it even higher? Okay, it's the same as it was last night, but this is freaking cool. So I told you there's going to be a re-rating here, and we got to see that. We're starting to see these growth rates increase. So this is now not 150% for next year. It's 159%. So an extra almost 10% growth. Instead of 190, we're looking at 198. Okay. So big increases. Now, instead of going, which I think was like 5.75 billion, we're now at like almost 6 billion for next year. So an extra $200+ million. The quarter before that was supposed to be 5 million. It's now 5.2, or sorry, last was 5 billion. Now it's 5.2 billion. So the estimates continue to rise. And if we even look further out for next 5 quarters from now, so September Q3 of 2027, we're now expecting $7 billion of revenue. It's just insane how much Wall Street thinks that this is going to continuously improve. Mind you, whenever we look to June of 2027 before, that was less than 100% growth. That was like 90%. That's 132% now. So they expect these triple-digit growth rates to hold for a long time now. And then, you know, if they continue to beat and raise, by the time we do get to the 7 billion, will it even be 7 billion, or will we continue to reiterate higher? You know? Evan in chat says my CoreWeave cost base is now $79.70. Brother, congratulations on that. Congrats. I snagged 1 share of CoreWeave at 72. Wish I had more cash at the time. Can't go broke making a profit. You know, it might not be a big dub, still a dub. All right. Let's see. Hood's having a good day. I saw that actually. I saw that there's a lot of fintech names that are seeing a good day. Now, Hood up 4%. They ended up showing off their July numbers yesterday. I don't think there was too much exciting. I think the numbers that I haven't done is like market share gains. Okay. So if you compare it to other names in the industry during July, like I don't think the important part is how much you've grown or how much you did not grow. That can happen from just the macro. If there's less amount of equity trading, options trading, event contracts, yeah, of course, July wasn't really part of the, World Cup. So it is going to be less than June. Like there's no question about it. But that might not be the full story, okay? Essentially, what we need to compare is, are they taking more market share for the next big run-up? Did July outperform IBKR? Did it outperform Schwab? Did it outperform Kalshi on the event contracts? Are we taking market share from other companies? That is where the real story is. I've not done the math on that, and that might be why the stock is up, because maybe Wall Street has. Your Google shirt is so sick. Thank you, dude. You should see the back of it. It's freaking amazing. The back says like this big thing that says "Stay curious." I love it. The Google search team specifically sent me this. Bow. How did you know that was Google? That's such a small thing to get. Does this guy work for Google? I don't even know how you saw that. Nvidia hat, Google t-shirt. You should catch me at a party. I'm the freaking life of it, dude. Can we see the inside of it? Take it off. Are they paying you to wear it? Andrew, every t-shirt of mine is merch now. Okay. I've told companies forever, like, you know, that guy from Notion or whatever that was in chat yesterday, send me a Notion hat. It's the freest promo that you'll ever see. I've got beside me just a bunch of hanging hats, one from Google. I'm wearing one from Nvidia. I've got one from Neobank and all these different companies. Like, I just like it. I like supporting they're like sports teams to me. Like, I love these businesses, you know? Is the sports team in your city paying you to wear their merch, or are you just a fan? CapEx drip. Dude, CapEx would be such a sick hat. Just saying, like, if I had merch, I would never name it future investing. That's gross. But just having a hat that says CapEx. Oh. Where's the SoFi drip? I don't have any SoFi drip just yet. The only SoFi drip I had, one of my buddies printed me a shirt, but the thing's kind of peeling off a little bit. Okay. Let's go ahead and continue on with some of the stories. Like I said, there is new models that are coming out. Gemini 3.7 Flash. I got something in my eye. Is now out on Vertex. They're starting to roll it out to enterprise customers. Hopefully we see some benchmarks on that soon. I don't know if it's been publicly addressed that it's out, but it is starting to roll out. Dude, is Micron running? Wait a sec. Oh, no. Okay. Well, I mean, it is running, but like, I was looking at a 5-day chart. I thought it was up over 10%. But, I mean, we still are up 6.8%. Adyen ended up showing off earnings this morning. Really exciting news from them. Picked up in their growth rate. For people that don't know Adyen, they're a little bit like Stripe. They're a payment processor. Not many people know the name. You might see the occasional point of sale terminal out there, but really they do back-end payments. So they transact, hundreds of billions of dollars for companies like Meta and, Amazon, these sort of companies. They've really dominated in the enterprise scale of payments, where Stripe has dominated in sort of the SMB and mid-market. So yeah. When is Fintech Frenzy? Fintech Frenzy is kind of part of the Market Monitor now. We kind of put that into this show. Yeah. Vlad should be fast tracking some hood merch. They do have hood merch. They do. I have some hood stuff too, but I don't know where it is. Kind of lost their market cap hat. I wish I had it. Okay. Am I going to the Hood Summit? I don't know yet. I don't know. Honestly, I'm focusing on one thing. Oh, we did get benchmarks for Google's 3.7 Flash. I'm focused on one thing right now, and that is our meetup. So that'll be Saturday. I don't know. Can I sort of bring this past you guys? I've never put on an event before. I don't know if I should be bringing stuff in terms of name tags. Do you think that would be easier for people to talk to each other and know who everyone is if they have like their either YouTube tag or their actual name? Do I need sign? Like, I don't even know. For the most part, everything's kind of handling itself. But because of how easy it is, I feel like I'm doing something wrong. Bring your shoe lifts. Dude, I'll go barefoot and still be taller than half you guys. All right. I remember there was like some 7-foot tall, actual NFL player. He must have been. And there were 2 of them at Amit's last New York meetup. And, they came up to me to say hi. And I was like, oh, hell. I was like, please don't hurt me. Are you the security? It was wild. Where is the meetup? Toronto, Canada. You can ask your fiance. You said she's an event planner. No, I did not. She's doing our whole wedding. So in that way, she's an event planner. But it's so funny, man. My dad reached out to me. He's like, hey, what day's the wedding? I was like, I don't know. Ask her. Like, dude, that's a year plus away. Why would I know? Okay. Where in Toronto? Wouldn't you like to know, weather boy? Go to the meetup link in the description. Okay. Yeah, I saw that Open Door bought 5% of their shares back. I don't even care in the slightest. I didn't care whenever they had a cash position, and I don't care that they're using it to buy back their stock. You know, it's the same. It's the equivalent of them having the cash. At the end of the day, you need to be able to generate more customers, bring in more money, improve margins, and from my understanding, that's been a little bit harder for them. Any company in the world can buy back shares. You're like a baby with millions of candies. What are you talking? I bought some more Apple calls today. No, I think the real way to say it, the first O definitely gets passed up, but also the T at the end gets passed up. It's just Toronto. It's not Toronto. But yeah, I don't think many people actually that are local to Toronto say Toronto. I just say Toronto, which is terrible. It actually sounds horrible. Am I going to cover Nubank? I don't think so. What I think I'm going to do is go live after earnings to just go through dLocal and Nebius or dLocal and Nubank earnings, like on a live stream, rather than have to listen to the call, because honestly, the call is so long that like after it, I'd rather just listen to it at a 1.5x speed and listen to dLocals as well. If I go live or from now all the way till, well, essentially 7, because their call is like at like 5:30 or something. It's just going to be a lot. Michael Burry, yeah, he doubled down on his Nvidia or on his Nebius short position. So, yeah, he doubled down on his Nebius short. So that increase that we saw in the stock price of like 34%, he is taking that on the chin. He did not, try to roll out of it or say something to his followers where he's going, oh no, I didn't lose all that. Like, no, he said he's doubling down. So the first tranche of shorts, a little bit in the red. Today, maybe he's a little bit in the green on depending on whenever he bought his shorts yesterday. Nebius down 2.8%. Okay. You look great with long hair. Thanks. Yeah, I showed a picture of my man bun yesterday. I got a ton of comments on that. Hood's going to 100 right now. Okay, let's check CNBC as well. Oh, wow, it is going for the 100 run. We did touch it today, but we're up another 4.5%. Shift 4 also up 4.7%. Affirm up 4.8%. There's a lot of fintech names right now. Klarna up 5.7%. Rocket Companies is up 7%. Bullish up 8.2%. Very, very interesting change versus the markets that we've seen before. Wix up 8.2%. S&P did breach new all-time highs today, passing that 7,800 for the first time ever in history. Okay? I'm not investing for this market. I'm investing for this market. Whenever people complain and talk about the large sell-offs that they're expecting, it's time to zoom out. you know, the markets are seemingly going more parabolic, which can lead to moments of large sell-off, like what we saw in 2025, what we ended up seeing in 2021, what we ended up seeing during COVID. I'm not saying that we're immune to all sell-offs. There's a possibility that that things sell off. But if you end up looking at the companies that the S&P is following, we've never been more cash heavy. We've never been making more overall earnings. Growth is starting to pick up. Earnings beats are happening. That is what we like to see. I've heard you say you've avoided boost run. Will you be paying attention to earnings tomorrow? Could be interesting, especially after sell-off from $40. I mean, it's the first time I'm hearing about the earnings tomorrow, but yeah, I'm not avoiding it. It's just someone told me about it. I didn't end up pulling the trigger, and then that came to bite me. So not avoiding, but just, you know, didn't get the company at $18 whenever someone told me about it. But like, you know, I also didn't have much time. Like almost the next day, it was up like 10% or something. Okay. Lena, how you doing? I took some profits today. Who is taking profits? This seems like a market that obviously we did see a nice run up, new all-time highs on the S&P 500. Many AI names are getting back to maybe not extreme greed, because I think a lot of the AI names are actually like, it's being backed by real earnings. But we've seen a lot of these sell-offs, and I don't think the market is the stranger to this huge amount of volatility after we see these run-ups, right? Databricks talked, literally, we just listened to it 20 minutes ago, about how we see these run-ups by 20%, and then we see these sell-offs by 20%, and then these run-ups by 20%, then we see these sell-offs by 20%. So are you guys looking to take advantage of that? Who's being a little bit more of a trader in this market? Let's start a poll. Are you trimming stocks here? And whenever I say trimming, I mean going into cash. I want to know who's going into cash. And cash equivalents. And what I mean by that would be things that are being extremely defensive. How about that? Like, if you rotated it into gold, go ahead and put yes on that if you're scared of the market. I trimmed some Nebius here. I'm going into margin, Mitch said. Should I sell everything and live like a baller for one weekend in Toronto at your meetup? No. No, let's just have a nice meetup. No need to ball out. Should have trimmed CoreWeave, Tanner. Come on now. You guys know I don't trim. I can't take profit. It's a sickness. The only way that I take profit is if I see a better opportunity. If the current environment, if the thesis that I'm investing in the company ends up souring, I'll sell. I've done that for many names where I go, this is not becoming the company that I want it to become. You know, I don't even consider that my fault. Like the story that they laid out and then their execution on that differed from what they said it would previously. Now, I don't sign class action lawsuits because they failed, like some, but you know, I do think that if you do find the executives and founders that can execute, that can constantly attack new markets and win, there is no point to sell those companies. And I think that of Google, I think that of Microsoft, I think that of Amazon, I think that of Meta, and that's why they are called big tech, right? Is these companies, even through new management, have constantly had high quality talent and a strategy for going after larger and larger total addressable markets for decades. I don't think that those companies should be trimmed here. As for the CoreWeaves and the Nebiuses of the world, I don't know what the market's going to do. I'm not smart enough to know what's going to happen tomorrow in the market. What I do believe in is that CoreWeave is going to see in, roughly 5 quarters, that's $7 billion of revenue over what they're doing today, which is like 2.5 billion. And if that continues to happen at higher and higher margins, that'll give them a lot of flexibility to handle the problems that we see in terms of debt, in terms of their depreciation schedules, which actually are starting to look very conservative. We're going to look back on it and say, like, it's wild that Nebius had a 4-year depreciation cycle on their chips. It's going to be wild to think that. You trim Shift 4? Dude, Shift 4 failed they failed at executing at the level that I wanted them to execute at. If you go ahead and you look at Wall Street revisions for Shift 4, they've gone down over time. Not in a straight line, but like they were not executing at the rate that they wanted to over time. That's, I don't think they lived up to what they were saying that they wanted to do. That sucks. Look here. This is Shift 4. Revisions, all in the red. Red. EPS, little green, but that's only very recently where we ended up seeing a little bit of a tick up. At the end of the day, the main focus is revenue. Or sorry, this is backwards. Revenue green, EPS is red. My bad. I actually like revenue more because revenue is the driver of EPS. You can only bring margins up to 100%. There is no cap to revenue. Whereas if you take a company like Palantir, for example, the revisions are just straight green. EPS, straight green. And it's not like small 0.6% or something like this. I mean, we're just looking at a different company today. You trimmed SoFi? No, I didn't. Don't be even saying that. I'll time your ass out. I don't want to see it. That's not a joke, okay? That's serious business. I did not trim a single share of SoFi. Okay. Will you need to organize some food for the meetup? No, I mean, if there's an option for me to pick up some appetizers or something like this, I will. But for the ticket price that we ended up doing of $15, that's not, of course, including food. I mean, the drinks alone are $15. So the bar or whatever, it's like a bar/restaurant, will serve food to whoever wants the food at any time. So that's also why we picked that spot. But I didn't want to charge, between $50 and $100 a ticket or something like this, and then do food and drink. I'd just rather let people get whatever they want. And, you're either giving it to me and I give it to the restaurant, or you just give it to the restaurant. It's the same thing. Okay. When Tanner says okay, it makes you feel everything will be okay in this world. All right. No, I didn't mean free food. Yeah, no, there's food there for anyone that wants to eat. And it's also in the downtown core of Toronto. So if you guys want to leave, go out and get something, come back. Like, I'll be there for 6 hours. 6 hours just in I got to think about when I'm going down. I don't know. There's going to be weird stuff like that where I'm like, all right, are people going to follow me into the bathroom? I remember that, like someone meeting me. I was at a MITS meetup in New York, and someone like tried to handshake me right after. I was like, can I wash my hands? So, yeah, Kelly's going to be my bodyguard. Yeah. Do I need security? No. You in Oakville, Saga, or North York? The meetup will be in the downtown core of Toronto. Where do I live? I mean, can I have a bit of privacy? It's going to change my opinion on you if you live in North York. Are we getting wasted? You know what's so funny about that? I don't drink. So I'm getting everyone else a drink ticket. But I don't drink. I mean, I might be persuaded to have one drink. No, but I literally think I'm allergic to alcohol. It just doesn't bode well in my system. Okay. He looks allergic to alcohol. Do I really? I feel like I look like somebody who drinks. I got the party stash. That's what this stash is called, right? This mustache is called the party stash. What's BM&R doing? Well, let me take a look at Ethereum. Ethereum's flat. BM&R, pretty much flat. Bending Spoons, though, what is happening with this name? Why is Bending Spoons down 18.6%? That's what I want to know. What's happening with this name? And like, oh, they reported earnings. Non-GAAP EPS of 46 cents, beating expectations of 26 cents. Revenue of 700 million, beating expectations of 682 million, up 126% year over year. Q3 guidance implies 113% year over year growth. I think, I kind of like this name. This feels like a super young Berkshire Hathaway. I don't know why people don't like this name, or like why it's selling off. I think the CEOs are like in their young 30s. Let's check their IR page. Q2 results. I bet they barely have an earnings page. I knew it. No earnings press release, just a single, no presentation, just a single press release. These guys are here for the money, which is good. That's honestly what you should want from stocks. Diluted EPS is up 163% from Q2 of 2025. In May, we completed the acquisition of Tractive for an enterprise value of $759 million. Tractive provides pet tracking and health monitoring services and monetizes primarily via subscriptions. Leverage ratio of 2.4x. Maybe people don't like that. They also bought another company already that was Airtable in Q3. So we know that. Net income rose 171%. I don't know why I like this company so much. Like, this is, I think, the ultimate SaaS, like buying companies for the value that they actually have. Bending Spoon seems to feel like the absolute epitome of that. It's the ultimate, hey, SaaS companies still have value left in them even after they're done growing at their peak levels. They've got AOL, Eventbrite, Vimeo. Eventbrite, we completed the reorganization, shipped nearly 40 product improvements, increased first-party advertising revenue by approximately 20%, reduced paid user acquisition spend by 30% by curtailing unprofitable expenditures, and started mitigating the back-end infrastructure to a more modern environment. That's all they do. They just buy up these old businesses and just say, hey, let's stop running them like crap. I don't know why. I don't know what happened in this stock that people hated. Cash went up, but they also IPO'd. Long-term debt at $4 billion now. Yeah, I mean, not everything's perfect, but it fell 19% and still falling. We're under $40 now. This is at like $58 this week, I think. Yeah. Like, what an insane reaction. Let's see if I can just see the peak to trough there. Down about 32, almost 33%. It's exactly, they are a publicly traded private equity business. That's exactly what they are. Is up 15% and down 15% every day normal? I don't think so. This feels like a more volatile moment, but also there's always these periods, you know, like going through 2018 felt like a time that no one had experienced. And then 2019 as sort of the really bullish year felt like crazy. And then obviously COVID, that was a first in history. 2021, one of the most bullish periods. 2022, one of the saddest periods for tech. Like, I feel like it's constantly seeing periods of just like, we've never seen this before, but then they keep repeating themselves. So this feels like an extremely volatile moment, but I don't have stats to back that this is the most volatile year ever in stock history or something. I wouldn't get used to the percents being this high, though. I took a piece of it on IPO. What was IPO price for Bending Spoons? Okay. Kathy Wood just said foreign capital is pouring back into the United States. New tax laws and depreciation rules are driving real physical investment, not just market flows. Imports from China and Hong Kong have been cut in half, with Vietnam, Mexico, and other Asian and Latin American companies picking up the difference. Okay, let's have a little listen to Kathy here.
Foreign direct investment into the United States is exploding. It's not just through the markets. It is actual physical investment thanks to our new tax laws and depreciation. Here, a little bit more of a breakdown. China, our imports from China and Hong Kong have been cut in half to the benefit of Vietnam, Mexico, and other Asian and Latin American countries. Here's profits, US domestic profits before tax. They're hitting highs we have not seen in many, many decades. And you can see that the profitability increase during COVID, helped by massive monetary and fiscal stimulus, has held. And the way it's holding is with AI and productivity increases. So it is not out of the question that margins will continue to increase. But we do think productivity gains will go to margins, will go to paying workers a little better, and maybe will go to cutting prices to remain competitive.
Okay. I know some people got potentially burnt on some of the ARC products and their ETFs, but to point as that type of, even just that information that for the most part was not even opinion based, it's just stats, and thinking that that's not useful because it came from Kathy Wood. I mean, that is, I think, the wrong way to look at it. Sure, the data that she's receiving, spending millions of dollars on it, is accurate. And the fact that she gets to share with us is helpful. Let's continue on some of the AI funding sprees that we've ended up seeing. This should bring up Wix stock, and in fact, it has. Lovable just raised $400 million at a $13.3 billion valuation. The Swedish vibe coding startup hit $500 million in annualized run rate revenue in June per TechCrunch. That is ahead of Base 44, but Base 44, which is Wix's company, is not far behind. In the fact that you can look at a company like Wix that is not having to go to the markets to raise $400 billion. It's not like, or $400 million. They're not just getting $400 million. They have to sell their shares to do so. Every single shareholder that existed before that raise just got diluted. Okay. And so whenever that happens, that's worse. You have less ownership over the overall company. You benefit least whenever the valuation goes up, over time, unless you continue to buy into all the different seed rounds or different raises. Wix is self-funded. They essentially are putting a lot of their money into Base 44, which is a direct competitor to Lovable, and doing quite well, growing in a lot of their market share. And that's why the company is up 10% today. Mind you, if you go back and you look at this company over the last roughly 2 months or so, back in June, it was $40 a share. Okay. Should I have pulled the trigger? Yeah. Did I? No. But hey, it's not that we poured it all into something else that wasn't working. We were betting on the Nebiuses and the CoreWeaves and these sort of companies at the time. So still happy with just the confidence of their comeback, where whenever I think you look at some of the Wix numbers, there were some numbers that had started to go down, like partner revenue, and it just wasn't as clear. But hindsight's 2020, and whenever you look at Lovable going up and then that's starting to get favored by Base 44, you're like, obviously that would happen. And that's sort of the hard part of like seeing it whenever it's happening. You're like, okay, is it ever going to see that benefit, or is this only going to impact margins negatively? And then once Lovable gets that premium, you go, oh, okay, well, I should have seen that. Okay. Let's see here. BMNR is so dead. I mean, just like Wix, it's dead until Ethereum comes back, right? Like Wix was dead until Base 44's competition got valuation raises. And so you're seeing the spend increase for Cursor, you're seeing the spend increase for Lovable, and you're going to see that for Base 44 as well. They just announced that they had 10 million builders on Base 44. So they are growing in their market share like crazy. Okay. Claude Opus 5 is now available in TrendSpider, Sidekick AI for research, chart analysis, back testing. Grok 4.6 is now available in Pi. Dude, it's like the amount of new models that continue to pour out, it actually feels like Claude has been the most quiet, even though obviously they're still leading, and Fable 5 is still the leading model, and of course they have models ready to go, and they're working super hard, and they like there's now been rumors talking about how the amount of ARR that they're expected to get to by the end of the year is somewhere between $100 to $120 billion of ARR, which would actually be one of the fastest growing years by percent base. If you don't know, if you look back at the last 3 years, or it might have been 3 or 4 years, Anthropic has 10x their revenue every year, almost like clockwork. 10x, 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 and they've just essentially added a new zero every time. So last year, they ended with $10 billion. The year before, $1 billion. The year before, $100 million. This time, Dario came out and said, hey, you know what? We're likely to not see $100 billion, but if we see 5x, it's still going to be a big growth spurt. And then everyone went, 50 billion in ARR. Okay, buddy. Like a bunch of yeah rights. And now we're really coming up on it. There's been signs and people who are familiar with the matter, I'll put that in quotation, that have said that they're already surpassing 80 billion in annualized run rate and revenue. So we'll see if they end up getting past 100 billion, but if they do get anywhere above 100 billion, it'd actually be their fastest growing year in the last 4 years. Wild. Okay. Tanner, why have they stopped announcing Anthropic or OpenAI advancements that tank SaaS anytime recently? Because they are now getting too strong. That's at least the commentary. So the reason why ChatGPT has not released Astra, the reason why Mythos Preview or Fable 5.1 or any of these models, or even OpenAI's Doug, which supposedly is like makes Fable 5 look primitive. The reason why none of these have been released is that they're saying that, we essentially have to strengthen the internet before we end up releasing these. So they're releasing them in like research previews to let like Red Hat hacking teams and these sort of things go out and find vulnerabilities, but for good purposes and to help with bounties. I think the most interesting thing, and this is not highlighted nearly enough, I think Chamath actually did a really good way of explaining it, is like the only reason why you're seeing all of these models end up hacking their way through into different businesses is because essentially the back ends of those companies were built by humans. And if you're taking a super intelligence AI bot to try to crack into some human built wall, and essentially the way that I see it in my head is like a physical, like constructed brick wall. It's like if you actually had an equivalent defense team trying to go up against it, there would be no faults. It's not that security doesn't work or there's some ultimate like, hackable way of just like breaching attacks. It's just finding vulnerabilities that essentially weren't patched up. That's my understanding, right? It's areas in the plaster that just weren't done so well and the ants are crawling through. Getting through back-end channels, acting as if you're an admin, calling and saying you are a certain person, which you're not. And then, the back-end person essentially unknowingly helps you get through. It's not usually just like, hey, I've set up this code and this code is just going to break down their walls. That's my understanding of it. The IT people in chat are pulling out their hair, but, I got the mic and you don't. La, 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 la. I'm so stupid. But if that is essentially on the other side, the defense side of cybersecurity is being put up via these extremely strong cybersecurity defense models that OpenAI is making and Anthropic is making, then that's like, there might be an even safer internet. There might be a way to anyway, I've already said it, but essentially bring up the defenses even more, make those vulnerabilities less likely to happen. AI might be the greatest thing for cybersecurity. But yeah. Nah, dude, you got it right. Thank you. I got one guide. There's 7 people in chat going, you got it wrong, and I get to highlight which comment. Okay. Cool. I'm so sorry. I have to answer this text. Okay. Sorry about that. Tanner, do you have a thesis for UiPath? I do not. Sorry. Tevis sent nudes. And I just have to reply. Yeah, so by the way, the shorts that Michael Burry put on was not just for Nebius yesterday, mind you. It was also, he shorted Micron, Oracle, and Nebius. So Micron's up 6% right now. It's coming down a little bit. Like we're not at the 978 that we were a little bit earlier ago, but yeah. He shorted AMAT recently as well. Oh my gosh. Okay. Let's check CNBC right now. I was only supposed to be on for an hour. This is always what happens. I say I can do an hour and then we go much longer. It's genuinely just so fun. Like, I don't know why I treat stocks like sports teams, and I love the business behind them. You know what's an underappreciated part of knowing, of understanding markets? This has been the greatest thing for me, is that whenever you see a company raise price on tomatoes, on lettuce, on the recent iPhone, okay, you actually get to realize that this is not Apple greed, this is not Google greed. And you can see some even politicians where they'll point to that and they'll say, hey, every single smart, the big tech companies are bleeding into the pockets of the average person because they're raising prices on their phones that they need every day. Then you realize that they don't want to do that at all. And in fact, Apple will be taking a big hit in their margin to potentially push out better prices for the iPhone 18 Pro. But like they're actually, losing money to try to offer prices to well, I mean, not losing money, but as a percentage of overall gross margin, they're still going to make money. But that's what business should do. They have to pay their salary so then they can pay their employees' salary, and the list goes on. And there's no such thing as maintaining. Everyone wants the top spot, so you have to constantly be making more money because everyone around you also is. And I find that whenever you start to look into stocks and realize that it's a matter of, hey, they actually do want to offer you better products because they want to win market share. They want to be able to defend against their competitors, that they're actually offering you better and better services. They're raising prices because there's geopolitical conflicts and the price of oil and electricity and these sort of things. Like, the prices fluctuate constantly. It's not the people at the gas station that just decided that you should pay, much higher price per gallon of gasoline. It's more along the line of, hey, you know what? There's the Strait of Hormuz is being closed down. That availability to understand markets a little bit better is a super underappreciated advantage of learning about different areas. Learning how greedy those big banks are for not giving me an APY while using my deposits to take out loans. Not saying there's not greed. There's definitely greed, but you'll actually understand what is greed and what is, you know, companies that are just having a explosive increase in their average cost of doing business. Okay. Not expecting the Fed to hike rates. Ooh, let's have a listen to this. And then we'll check if we're seeing lowered. Do you guys see? Okay, I was like, what the heck's happening?
Now with her insights on the markets, Alicia Levine, Chief Investment Officer at BNY Wealth. It's so good to see you.
Good morning.
So today's a really big day, obviously. Second inflation print following CPI yesterday. We get PPI today. Another data point as we try to assess what's going on with inflation and what the Fed might do next. What's your expectation?
So look, we think the Fed's probably not going to hike in September because the CPI really took some of the air out of the room on that one. But nevertheless, there is an inflation problem. But this Fed right now with that labor report, we think is probably going to be on hold right now. So look, we know there's inflation coming in from the imports, from the tariffs, and of course, because of the oil prices. That story still remains. The issue really is, does a one-time price shock and does a supply shock warrant hiking? When the labor story was acquiescent, that produced a different probability of hikes. Now that we had that one data read, I think there's just a two-way story here. And my guess is they probably hold for now. That doesn't mean it's the right decision, and that doesn't mean they can hike later on.
So then what do you think is being priced into the long end of the curve right now and just the general reset higher?
So look, I think that the curve is pricing in just the supply issue, right? So it's term premium. It's the fact, we had deficit data yesterday, like the deficit's just moving higher and higher. There's no plan to address it. That is what's being priced in, as well as just the issuance, on the corporate side. We're just getting a lot of issuance as well. And there's discomfort about the level of debt globally, not just here, looking at Japan, looking at what's happening with JGBs and bond yields there. So it's a global bond market. It's everywhere. There's indebtedness globally. That's what's being priced into global bond markets. So that's something we're looking at. We're encouraging clients not to be on the long end, be more on the belly. We think there's some value there. Ultimately, we think that the market expectation of many hikes is probably not going to happen here. There's enough of a two-way story. There was a one-way story 3 weeks ago, not so much now.
The remarkable thing when we look at the U.S. stock market all year, probably beyond that, is how little you've really had to worry about the macro. I mean, it's in terms of what's really driving things.
Yes.
One, it's kind of stable. And two, yields have roughly been range bound. But three, the earnings story is coming from elsewhere. It's not coming from some kind of acceleration in the underlying economy or trade or anything else. To what degree can we keep riding that, I guess is the question. It's one theme only.
Look, it's a great point because we talk about Fed hiking, not inflation. The bottom line is that the equity market hasn't cared. And it hasn't cared because growth is holding up and earnings are great, not just in U.S. large cap, U.S. small cap, and globally as well. And so when you say the macro doesn't matter, it tells you you've got a growth environment, you've got a manufacturing re-acceleration, not just here and globally. So you can kind of go to sleep a little bit on the macro, understanding that when everybody's on one side of the boat, that's when you have to start worrying.
But even to put a finer point on it, I mean, 18% of the S&P is semiconductors. Another 18, whatever you want to call it, is the four hyperscalers. They're not economically sensitive. They're being driven by this capital spending boom.
Yeah, which is 70% of all earnings growth.
Right,
That is the earnings growth.
That is the earnings growth.
That is it.
That and energy.
The five hyperscalers are funding the earnings growth of 20% of the S&P. The bubble, if there is one, I don't like using the word bubble, but the issue really is, and it's the one issue in the market, because the corporate market is an AI market on the bond side, as well as the equity side. The U.S. market is a AI market. That's what we're all investing in, is does the hyperscaler spending continue to drive the earnings growth of the 20% of the S&P that's driving earnings up 30% year over year?
Well, that would seem to be the only question that really matters for the stock market.
Matters.
And if the answer to that question is no, that earnings growth of the capital spending is going to slow down, and 20% of the market is relying on it, you better be prepared somehow in case that happens.
That's right. So the risk is there. Look, what we learned, we all talked about yields at 4.5% being the bogey for the market, and the equity market couldn't move higher, small caps couldn't move higher. Guess what? Didn't matter. And it didn't matter because earnings are skyrocketing. And earnings are skyrocketing in part because you have all the spending from the hyperscalers who are expected to spend over $1 trillion next year. The really interesting thing is this, in the deal that we heard from the 5 companies and Nvidia, is does this actually create a better situation for free cash flow for the hyperscalers? Because the funding may be coming from elsewhere and there'll be need for cloud, right? There's more capital coming towards it. So then you have a very interesting picture about where the value might be created, not just the story we're talking about, that the market's not buying the spenders, it's buying the recipients of the capital. This is an interesting story.
Or does it suggest that maybe the traditional mechanism for buying compute, buying chips has been exhausted, and therefore, you know, the financialization of this market is really kind of where we are at in the cycle?
That's right. And I think, look, where's the risk? That's the risk, that every asset class is now levered to the story that the LLMs are going to be able to monetize the massive creativity and the change in how we all work. That is the only question that really matters here. Can the train go for a while? Yes. But you have to insulate portfolios. You have to insulate. We don't see this ending. You're riding the train you're on because that's what's working. So you have to think about real assets. You have to think about other markets where AI is not the story, because you have to diversify globally. Because to your point, if the spending stops, the earnings growth is going to slow down, even if earnings don't go negative.
Yeah. A lot of eggs, big basket. So you got to think outside the basket.
But massive value being created, and you have to be levered to it.
Yeah, a lot of value being created right now. Hedge funds just bought $6.8 billion in U.S. equities last week, the largest weekly purchase in 18 years. Oh my gosh. As a percentage of the S&P's market cap, this was the 9th largest weekly purchase since 2008. So not just purely on dollar amounts, but as a percentage of the overall S&P's market cap. This follows the $4.8 billion in purchases the week prior, bringing the total to $11.6 billion over the last 2 weeks, the largest 2-week purchase on record. This also pushes the 4-week average of hedge fund purchases up to $1.8 billion. That's hedge funds. Meanwhile, institutional investors sold $1.1 billion, posting their second consecutive weekly sale. So this is crazy, dude. Look at how much the hedge funds are moving in, being a little bit more flexible here, and buying U.S. equities. Institutions selling a little bit last week, retail dumping last week. I mean, truthfully, yeah, it always comes down to this, right? And this is why I don't like moving my money around too much. I see the trend of the S&P 500 over time. It goes in one direction, up, constantly. I'm not worried about how rich I will be next week. I'm worried about how rich I'll be whenever I'm 30, 35, 40, 45, you know. And I think that the strategy that I'm employing of betting on the best technology companies and holding them for long periods of time, I mean, so far it's done really well for me. I think that it'll continue to do that. And you kind of get to avoid these mistakes that retail makes constantly, where they sell as things are going down. Well, the fast money in the markets, the fast big money hedge funds, are taking advantage of these sell-offs, picking up what Leopold put down. I'm 28. Yeah. How old is this little guy? What the fuck? All right. Okay. No, I'm 28. I'm not 26. All right. I got a 97 birthday, or a 97 year, October. So I'll be 29 soon enough. Little tiny Tanner, 5'10" and 145 pounds. Nick, I hope you're coming to the meetup. All right. So you get boxed out by this frame. I think I'm 5'10". However, I see your photo there, and I don't know if I'm going to have the ability to box you out, but I might not win the fight, Nick, but you're going to know you've been in a fight. The next morning, you're going to wake up, things are going to be sore. I'm not 145, dude. I'm 180 pounds. I was going to say solid muscle, but I've been eating good. Okay. You got the height? You said 5'10". I'm 5'11". '97 was a good year. Titanic, Jurassic Park 2, good as it gets. All right. I've never even seen Titanic, and I don't think I ever will. I mean, it's got to be a bad movie, right? I don't even want to see it. Okay. Matic Robots just got another raise, raising $115 million. Just added voice and gesture controls. You spill your coffee, point to the spill and say, hey, Matic, clean this. It'll hear you, locate in 3D, and go clean on its own. I've heard a lot of people say that these things are amazing. They're just expensive. Do any of you guys have one of these Matic robots? Rose was indeed the bad guy. That's what I've heard. I heard they totally both could have fit. Yeah, they could have shared the floating door. That's what I've heard. Kind of crazy. Okay. Well, that's the new Matic robot. Maybe that's the future. Let's see what else is on the list. If we don't have anything else, I'll call it there. I don't want to. Like, we're having a ton of fun, but if there's nothing else to cover, then there's nothing else to cover. We talked about AMD planning to raise up to $5 billion by selling debt. Nebius got their second stop construction on their New Jersey data center. We did get an update from Wall Street on some prices here from, what was it? August 12th, Citi put a $278 price target on it. Northland Securities, it says that they increased, but I'm pretty sure that's maintaining 410. We've saw that 410 price target for a while now. Bank of America, $310. Morgan Stanley. This guy with no rating, we've seen him on CoreWeave. We've seen him on many of these names. He's not been the most bullish. Yeah, he also put a $99 price target on CoreWeave. Let's talk about compounding wealth over time and your journey into investing. Well, my journey into investing was, well, I don't know. I guess my dad was like sort of middle to upper class. So he had discretionary income. Like we weren't doing unbelievably or anything, but like he had discretionary income. And so he was really into talking about the stock market. And then my older brother, I've got a brother that's about 8 years older than me. He was really into it. And so as the youngest kid, I just wanted to, you know, impress my brothers and my dad and stuff like this. So the second I turned 18, I set up a little TD Waterhouse account and immediately started to buy stocks. Actually, the funniest thing is the first company I ever bought was Tesla in 2015. Held it for a very short period of time, but still, that was one of my first companies. I forget what YouTube video it was, but I watched some video on the Model S, and that, like, you know, I was a big believer in new technology always. Immediately, I was always looking at new technology. But didn't hold on to that stock. Ended up finding, because my brother told me about Tweed, or Canopy Growth Corporation, as it's now called, and bet on that company. I remember my brother saying this company just went from $2 to $4 in the last 2 weeks, or something like that. And so he said, look into it, but obviously you might be buying a little bit high right now because it's like a lot of people are paying attention to this name. I put money into that name at 4. Started learning a lot about the marijuana industry here in Canada, because that, like, marijuana is legal here. And Justin Trudeau was essentially, that was a part of his campaign, that he was going to legalize marijuana here in Canada, which it is. I don't know the exact specification, but like, it's, no one even hides it. So we knew that there was going to be dispensaries and all this stuff, and more companies. And so, like, I was learning about that company and just poured all my money into that name. And then eventually got into Aurora, and there was a bunch of like small penny stocks that I was trading on. And I remember, like, there was one trade when I was really, really young that I made like $9,000 on, and I was like, oh my, like $9,000 US. And I was like, I just made more than what I'd make in 3 months. Like, and so it was like me just making a bunch of really, really lucky decisions in an environment where there was just so much bullish momentum. Money was just pouring into Canopy Growth and Aurora and all of these names. And it was probably about 18 months or so, 24 months where I was in that stock. And it had gone from $4, which my brother told me was expensive. And I ended up selling out, taking, like, I didn't trim, I just sold the whole thing, which was also turned out to be a mistake. And the stock was at $48. So made about 12x on, like, my, by far my biggest position. Like, it made up for like 90% of the money that I had. And so that's whenever, I still remember, like, you know, whenever someone says something to you and like it just sticks in your head and it becomes your identity. Like, I didn't even think of myself as a stock person even then, because like my brother and my dad, like, they invested, but it was only a side thing. And then I remember my dad, like, I was talking with him and he goes, like, you know, if you just really put your mind to it and you want to be an investor, like, you might be really good at this. I had the best returns out of my brother and my dad at the time. And then so I was like, all right, that's what I'm going to do. I'm going to stop working maintenance at this. Well, I also had a decent job too whenever I was young. I got hired at a union and was just doing maintenance, but they pay the maintenance people good money. So like, even whenever I was young, I was making an okay amount of money. But that's where I got the discretionary income to pour it into those marijuana stocks. But what's it called? And then I just made it my life. Like, that one comment that my dad made, it was like a click. And I was like, all right, I'm going to, you know, buy the textbook. I'm just going to go all in. Like, I'm just gonna, like, I'm going to be a hedge fund manager is like what I thought. And then obviously started studying a bunch, listening to every audiobook or reading the books, and just wanted to do this full time. And ever since that, you know, like, I mean, literally, because I was still living with my dad at the time, like, he made that comment to me. I was probably like 20, and then like turned around and I was like, all right, I just went back into my room and was like, this is my life now. And then became a financial advisor and did all that. And essentially the way that I thought about my career going forward was if I hedged everything to investing, I could learn about this industry while I'm at work and then go home and work on my own portfolio. And the thing that I hated was like, okay, being an air traffic controller, which is a amazing job. Like no bash. I'm not tearing down the people who do that job. Staple in our society. But the knowledge that you're taking at work and you have to learn for is space in your brain that you can't use elsewhere. For me, I wanted my job, my personal portfolio, my content creation, my everything to all be in the same niche. That way I could take my information from my trading and investing and go into the, my financial advisory, into like take my financial advisory information, bring it back to my own portfolio, and just sort of I had like a triangle of things that I was focusing on. Continuing to bet on future technology brought me back to pouring a lot of the profit that I saw from Tweed or CGC at the time back into Tesla. Really started to learn about from people like Financial Education Jeremy, or Solving the Money Problem, or Hyperchange, or like all of those YouTubers back in the day. And I just absolutely fell in love with Tesla. And then Nvidia. I've just gotten really lucky, but betting here's the thing about being lucky in those positions or whatever. It's like there's been a lot of positions that I've made that just have not worked. Like I put a lot of money into Barrick Gold. My brother became a gold bug and was, showing me Peter Schiff videos and all of this stuff. And I go, okay, well, I'll throw 10 grand at that. And then that, completely went nowhere at the time. And, probably took like a 60% loss on that. And I was like, oh, well, that was my first loss. And then there's been a bunch of things that like I've tried to get into and then, don't go anywhere. But those, like the losses that I've made don't even remotely, like they don't make a dent comparatively to having a compounding name that you hold over years. So going back to the original question that is probably way up here now, but like talking about compounding and all of this stuff is like, I just listened to the people who were legends at this game. Learning about Peter Lynch and Warren Buffett and Monash Pabrai, and like the list goes on and on and on. I used to have like these documents on my computer of like 30 different, just legendary investors, the Bill Ackmans, and figure out all their names that they were focused on, why they were doing that, trying to get access to their shareholder letters, just like understanding them. I don't do that nearly as much anymore because I find I got a lot of the necessary lessons that the Stanley Druckenmillers of the world were putting out. Like in terms of documenting and stuff, obviously you still listen to those people, but like, they would just constantly say to hold names longer than what feels comfortable. There's going to be times where markets get irrational. And like whenever Warren Buffett says that, everyone knows he said that, but then they think this time is different. And like, I don't know. I just completely assume that like the environment that we're in felt like the environment that they were in. If he says that there's certain stocks that can get irrational longer than we can stay solvent, then I'm going to believe him whenever Nvidia stays at 2. And this is not even a good example. I'm sure there's better examples than that. But like Nvidia at 200 and everyone clowns on you because it stayed still for a couple months. Like that's no time at all. Like focus on the underlying company. So yeah, I don't know. I don't have any lack of losers. I pick bad stocks all the time. I just don't double down on them. I don't like watering my weeds. In the times that I've done that, I've lost a lot more money, and now I really try not to do that. as Shift 4 has fallen, I've not bought in the dip on that. Because the earnings didn't look as exciting. Like if a company, if I model out a company and then they beat my expectations, but the stock falls, and I understand why it fell, like, hey, you know, they're not super excited about CapEx or something like that, but that's like sentiment driven. Like, yeah, okay, it can increase risk, but you're not actually seeing that risk develop right now. It's hard to, you know, like essentially go out and say one blanket statement that works across every single industry. But yeah, like I don't know. If a company continues to outdo my own expectations, I have a very, very easy time holding them whenever they sell off. Okay. Is there some news in SaaS? Software about to make a run, massive gains. All right, we can take a look. Okay. ServiceNow. All right, I see what you guys are saying. Silver Lake in talks to acquire Workday. Silver Lake has held discussions in recent months to acquire Workday, which has a market value of $43 billion. Wow. So essentially what this is right now, yeah, wow, circuit breaker on Workday. SaaS is going up because private equity firms are essentially saying that if these get too cheap, that they're willing to acquire the entire business. Not sympathy, sympathy maybe, but like I would think of it as like, you know, a margin of safety rather than sympathy. That, hey, you know what, I can buy into this business, and as long as the fundamentals continue to improve, there is capital out there that is willing to buy these businesses. Zeta, yeah, but that all falls on the same news. That's all the same thing. It would just be SaaS in general, you know, and probably smaller SaaS rather than bigger SaaS. I mean, maybe Palantir's moving as well, but like this is not going to move nearly as much as like, or Microsoft's not going to move nearly as much as the companies that actually can get acquired, like Zeta. Like it's nice for Microsoft, but no private equity firms coming in and buying Microsoft. Yeah, sorry about my long-winded thing. My long-winded answer to that. I just thought there was not much news that was actually happening. Turns out, huge development while I was talking. But that's a little bit of my background for anyone that hasn't heard it in a bit. It's okay. I muted you during that time. Oh, that is freaking funny. Okay. Tell the story again. I just got really dizzy. Holy. Okay. That's probably not a good sign, right? That's not a good health sign, is whenever you're just sitting here and then you just get the spins for no reason. Maybe I should stop sitting. Okay. By the way, you don't need to diagnose me. There's like 1,000 people in chat being like, oh, you have cancer, you have a brain disease, you have this. Oh, dude, I broke my leg one time. You have a broken leg. Val's just did a Series A. Wait, when was this? When was Tom Lee? Was this from today? Was he on CNBC? Let's see when Tom Lee... Dehydration? All right, that one I can solve. I got water on tap. Time for a sauna. Oh my God, I had an amazing sauna yesterday. Amazing. Okay, are the SaaS names starting to come down? I mean, this is a good benefit. Like ServiceNow, 128. Gotta love that. Wow, Workday did another circuit breaker, now up 26%. Man, the markets are so freaking green. S&P back above 7,800. Wix up 13. SanDisk up 15. Adyen up 15.8. And you got to love how diversified it is. Rubrik up 7.5%. Yep, that's bringing me up to another high in the draft, 10.6%. Wow. That is just phenomenal. Brett Winton just tweeted, assuming the blistering pace holds, by the end of the year, Frontier Labs should be able to deliver 87% performance. Okay, yeah, I get that. Yeah, I don't really care. Not that I don't care, but it doesn't tell us what the financial impact of better benchmarks are. Another circuit breaker. So let me know again. How long would this circuit breaker mean if this is the third one that we've hit? Isn't this one like 15 minutes or 30 minutes long? I'm pretty sure they get longer. Okay. Leopold is like, yeah, he's like AI Jesus. He had to sacrifice himself. Said, it's okay, guys. So stupid. He's not the superhero we wanted, but he's the superhero that we need. Okay. The third one is the rest of the day. Well, was there 3 already? I'm seeing these large pauses here. So is this the end? Leopold short. Yeah, no, ZW is right. He didn't just bet long AI. He also bet short software. So he, I think, was getting killed on the other end too, because a lot of these AI names did survive very well. I'm confused what's happening. Oh, we're unlocked. Up 27, 28. So circuit breakers are there to protect against volatility. If you have these moments where it can even happen to broad markets too. I think that's whenever it closes for the rest of the day. But whenever you see so much buying activity on a stock in quick succession, the stock will block for a second just to say, okay, cool your jets, give yourself a minute to think. And then we'll turn the orders back on. I'm pretty sure whenever it's full day, certified is correct that like if the markets drop by like 5% and then 10%, then 15%, it's just like, okay, let's take a 15-minute pause. Let's take an hour-long pause. And then by the third one, they're like, come back tomorrow. Okay, everyone go to bed. Which will be interesting if we ever go to like full 24-hour markets to see how those types of circuit breakers work. To allow hedge funds to manipulate. Water doesn't solve dehydration. You need minerals. Well, I got no minerals around here, man. I left my big, what are those big pink salt things that People use. Yeah, I forgot to lick a rock this morning. I do have liquid IVs downstairs. Maybe I'll go make myself a liquid IV. All right, are we streaming longer? Are we? I was gonna go. There's other things I gotta work on. But I'm just having fun. Okay. You're going to be here for new bank earnings, right? No. I'm not going to be here for new bank earnings. I might be back for new bank earnings. So I want, like, I'm going to be listening to D-Local. I'm going to be listening to Nubank, but I got to do some running around. So let's short a stock live. I'm not going to do that. If you stream longer, I'll donate now. All right, let's put it up to auction. We'll do what Nebius did. How much? 10 AED. Oh, come on, dude. This dude donated $2. Okay, go another hour. I'm not a circus bear. QXO is tonight as well? Okay. The Cisco CEO was on. Let's go have a listen to this. I'm going to go lick a rock and make sure that I live for the next hour if we're going to continue to stream. I did just get $2, so I have to go a little bit longer. Let's have a listen.
Cisco posting record quarterly results and strong guidance. The stock, however, is under pressure this morning as people are actually questioning how strong that guidance is. Joining us now exclusively here at Post 9, Cisco Chair and CEO Chuck Robbins. Chuck, thank you for coming on the show. It's great to see you.
Great to see you.
All right, so Chuck, I look at the actual situation of your different line items, and I see AI networking exploding, data center switching exploding. I'm going to say campus strong refresh, wireless strong. These are all the areas we always talk about with you. Routing strong, security mixed, software modest. Why is the stock down, given the fact that every one of those, except for software, is basically super cycle?
Look, Jim, it's great to be with you as always. Thanks for having me on. And look, I'm not going to comment on what's going on with the stock. We'll see how things play out over the next few weeks, which is when it matters. But I mean, look, I'm proud of the team. We had a record year. We had a record quarter. The analysts were looking for 9% growth. It was kind of funny to me that they were looking for 9% growth. We gave them 15, and they said, "Why are you being so conservative?" So I think that look, at this time of the year, we're starting a new fiscal year. We all know we're operating in incredible markets that are fantastic. You were just going through all the numbers, but it's also a time to we're going to start the year being a little bit prudent. We see what we believe is going to be the case for the year, but there's a lot that we got to get done. But I'm super proud of the team, and if you think about all the areas of our business, you just went through them. They all have tailwinds right now, and we're super optimistic and pleased with where we are.
Yeah, I think it's important for people to recognize, and it was not in any of the analyst notes, that you've got something called Silicon One, which, by the way, I know you personally developed. There was an acquisition you made, but you're talking about 10 years in the making. And Silicon One, I think, is the secret to a lot of what you're doing, and particularly in the data center. Maybe you can explain to people how you created this product and how, unlike everybody else who's like short memory and short the right chips, you actually have a surplus and can do whatever you want.
Yeah, Jim, it's important to understand that if we didn't have our own silicon, so we design our own silicon, we're effectively one of 3 companies that can provide the networking layer for these large AI training exercises and also the networking that our customers are going to need as they move deeply into inferencing. And we made that decision a decade ago. And then we also made a decision on some strategic acquisitions in optics and optical, which are, Acacia had another $1 billion quarter in coherent optics. And so the strategy that we've had to design our own silicon, to build systems, to have a direct relationship with TSMC, to have our dedicated capacity already set up for the year, we've already got the components, our silicon and everything lined up to deliver on the technology for the number, for the year that we guided, and candidly for upside on top of that if we need it. And I think the biggest thing is like the business model that we're running right now, the operating margins at the highest level I think we've maybe ever seen in Q4. The guide on the operating margins, the guide on the EPS, I think would indicate that the business model decisions we're making and the business that we're taking from the hyperscalers and the growth that we're seeing there is a prudent decision.
All right, so I want to talk about what I think are 3 super cycles at once, all right? AI hyperscale, this is enormous growth, okay, but some people say it's from a low base. Then you have a different cycle, which is the enterprise, which I kind of frankly given up on, okay? And then, within the enterprise, you've got telco and service provider, which I had also given up on. So what I'm trying to figure out, Chuck, is how many of these things are actually repetitive, in other words, that you're going to see more of, and how many of them are one-off?
We're in the early stages of all of these. It's the irony is our hyperscaler business, all 4 of the big ones grew triple digits. You've got the telco business that people didn't think was going to, really participate in this whole cycle.
Dude, the background got so loud I can't even hear him.
And our orders grew in excess of 30% in the quarter. You had the enterprise up 21%, public sector up 30%. You got the Americas up 44% on orders, EMEA up 20%.
Like, is it just me? Does that add to the listening experience to like listen to the Cisco system CEO in the middle of a train station? Like, it's so loud. Okay. You should check your blood pressure first. I don't know if the Whoop does check my blood pressure. Or you mean like count it for real? Is that blood pressure? Am I an idiot? No, that's heart rate. Yeah, dude. Put my fingers to my wrist, check my blood pressure. Okay. How do I check my heart rate right now? I don't think I can monitor my blood pressure from my Whoop. I can if I had the better version, but I'm cheap, so I don't have that. Drink an energy drink? No, I'm drinking a liquid IV, so I'm all good. Have you been tested for AIDS recently? Okay. Workday now up 18.8%. Let's continue to look through. SK Hynix up 8.7%, Shift4 up 8.6%. TTD is even up 7%. Dude, this company got clobbered once again on earnings. Like, I don't think you guys understand how hard it is for a company to go from $141 a share down to 14. They're down 90% since their all-time high. And I picked this company in the draft last year. But you guys don't understand, okay? For the people who do understand, remember, this company used to look like this on the other end. This was a Wall Street darling. You know, from 2018 up to 2024, Okay, so in a 6-year period, we went from $4 to 141. I mean, this was one of the greatest companies ever of all time. And then they sold off on bad earnings, which you can see here. And then I bought it. I think the draft was like about somewhere in here. Okay. So then early in the draft, it was looking really, really good because they did another earnings where they said, hey, last quarter was a one-time mistake. We're never going to make that mistake again. It ended up running up. Then the company sold off on the next earnings, which they said, okay, we're seeing those problems that re-arose. In my own portfolio, I immediately got rid of the name. Okay. If you see bad earnings once, that can be a fluke. If you see bad earnings twice, start to pick up on the trend. Okay. So I immediately got out of that. But the last year's stock draft, there was no trading ability. So that's TTD is the reason why we have the ability to cut names and add new names, because I essentially just bought a lemon. You know, so the ability now to trade out of bad names is because of the trade desk. Yeah, it's never two. There's never two bad earnings without a third. CEO Jeff Green needs to step down. See, the problem is he is a legend. Like, I think that their technology has gotten worse in comparison as companies like Google and especially Amazon have really, really stepped up. But Jeff Green, like, the people who have been following this name over the past couple of years, like, this was a Shopify level story. I mean, like, an unbelievable business. He used to call like what the future would look like for advertising almost as if he saw it before anyone else did. Now the company's a mess. But thoughts on AMAT tonight? Unfortunately, I don't follow it. Dylan became a member, says stop streaming now. There's people donating to have me keep streaming, and then people donating for me to stop. All right, Dylan, you're funny. Jose's in chat. Jose, you want to come on for a bit? Just do 20 minutes. Hear your voice. Tanner, are you full-time YouTuber now? You've been streaming nonstop. I've been full-time since like October of 2025? Or October of 2024? No, it hasn't been that long. It might have been October of 2024. I feel like I've definitely been full-time YouTube streaming for over a year now. Ed Zitron is welcome on any day. Please, if someone has contact with him, like, clip this and send it to him. Now, yeah, 5 hour streaming started. That's because Marshall. Okay. Marshall, we hired him on full time. I hired him on full time. But now that allows me to do a lot of the back end stuff that I needed extra time with before. He's handling it now. So I can just focus on the stock market, the new news, and that sort of stuff. And then he can clip it out and make it into the videos and stuff like that. So he's the reason why I can stream much, much longer and still get out content and do all that the same day. And hey, all it was money. Who knew money could solve problems? Who knew? I'm new. Hell yeah, dude. Well, thanks for being here, brother. Okay, I sent Jose the link. Is Trump live right now? What's he talking about? if this is important, we might check in on this. I don't think he's live right now. No, he's not. Okay. Unless he just said something. Oh, I wanted to check the Fed watch. Let's see. Is Rubrik in price discovery now? I just saw a comment say that. 104. Is that a new all-time high? Yes, it is. New all-time high on, brand new all-time high on Rubrik. Best performing name in the stock draft for me personally. Let's also check the Fed watch. We see a 33% chance of no change by the end of the year, 66% chance of a hike. That's some of the lowest levels that we've seen for a hike in a while now. But ladies and gentlemen, please welcome one of my favorite guests, an all-timer, the Nvidia GOAT, the CoreWeave connoisseur, the great and powerful Jose Nahar. How are you?
What's going on, sir? How's everything?
Things are good. Things are good. I expected to stream 1 hour today, and we're 2 hours and 10 minutes into that 1 hour stream. So having a good time.
I mean, you still got a few hours on you.
Yeah. I've got other things I got to do, but honestly, I like this job.
Yeah, I don't think we can complain much.
No. But that being said, for you, how are you feeling about CoreWeave? We were at like $117 earlier today. You must have felt pretty vindicated.
Yeah, I mean, obviously get excited super short term, but I still think we're so early. And I know people complain I'm such a bull in the AI. I find that so weird to find that as a complaint. I'm so bull in this AI story. I truly do believe AI is going to completely change how a lot of this technology is going to work. And while I don't believe it's going to happen in 2 months, in 3 months, I think long-term, this technology innovates and demand is going to continue to grow. So obviously happy short-term, and I tend to joke around. And it's like, yes, portfolio is doing amazing, but a lot of this diamond hands through the green and through the red, because I think a lot of these neo-cloud companies can easily be, in my opinion, $100 billion companies, and we're not there yet.
Do you follow Applied Materials at all?
As an individual play, no. But the whole sector in the equipment play is doing extremely well. Main reason is it's just too big for my style of investment. I'd rather save the big positions for like the mags, and then I tend to be a little bit more aggressive with some other names. But not Amtech, AMAT. What we heard from everybody, we heard TSMC really strong in capex and expecting capex to grow next year. We saw Intel do that $20 billion. Was it a share sale? I forget how it did was it dilution of shares to build up that $20 billion that they just announced, Intel? But for them, if they're raising $20 billion, is to increase their capex. I don't see another reason for them, and that capex is going to go for manufacturing. So the equipment player definitely has had a run up, and we see the stock price. So I wouldn't be shocked of earnings are probably going to be good. The final question is, how much has the market priced in? Because we have all that news already, right? We already know TSMC is increasing capex. We already know Intel is building up cash to be able to expand some of its manufacturing. We already know memory players and all these other players that also manufacture are increasing capacity build-outs.
Yeah. Intel did raise their equity raise. So
it was equity, right?
Yeah. They added more shares instead of adding debt. That was up to 20 billion.
Yeah, and it was it was pretty, and like, I mean, it was like $95. It wasn't too crazy from, I don't know where it's at right now, but
yeah, they said
like
that they saw over $100 billion in demand. That's why they're raising this money. Now the stock is over 105. Jensen's got a pretty comfortable $5 billion in that company at around what, $23 a share. So,
yeah, this guy's good.
Yeah, they're sitting pretty still. I'm curious if they might have been part of that raise. I don't know.
I don't think I
noticed they
saw
asked
any
the
major
US
names.
government.
Oh, the U.S. government. That's what it was. Yeah, it was like someone big was asked, and they said no, thank you.
Yeah, U.S. government declined to double down, but
And
I don't think
one
we
more-
heard anything from Nvidia.
One more thing that came to mind with Applied Materials is commentary on white room availability or white space is actually really good. They usually tell us like, hey, like what's happening? How are manufacturers buying more equipment? Are they buying it because they're finding more space in their building, or they're moving stuff around? They're putting everything so tight, or is greenfield or new facilities opening up right now, and they're able to buy more equipment? So, kind of commentary of how the growth in equipment sales is happening and where it's going to. I think it's also pretty interesting for the semiconductor investor if you really want to dig deep into it.
Yeah. We also have a D local tonight. I know you don't care about buying amazing companies, but and Nubank as well.
It's just like ugly companies with horrible balance sheets.
Dude, honestly, just because Neil and I are in it, you should just buy a sympathy share of both. That way you can enjoy the earnings with us.
All right, I'll think about it. Think about it.
But
how about you, Dan? Man, I mean, obviously we talked a lot with the other groups, but we haven't had a real single. Anything you really liked this week that either changed you bullish or more bearish, or has it been like nothing has really changed my thesis in either direction?
You know, it's a story that was starting to develop today that I don't think is getting enough credit because we don't have like real proof, I guess. But I think we're going to have proof in a month or two. Is that the Anthropic has went and had a 10x revenue growth rate for multiple years. They went from 10 million in ARR to 100 million, 100 million to 1 billion, 1 billion to 10 billion. That's been the years that we know about. Dario has been very open about that. He said last year in about January, he said, you know, we probably won't go from 10 billion to 100 billion, but, you know, the previous 10 X's, maybe we get a 5X this year or something like that. Now, it's likely that we're on pace for another 10X. And in fact, we have some estimates as high as 120 billion by year end, which would make it the fastest year, not just by sheer dollar amount, but by growth rate that they've seen over the last 4 years. Like, that's insanity. So what does that flow down to for Intel, for Nvidia, for AMD, for Cisco, for CoreWeave, for Nebius? Like at the top of the stack is the model providers. If they continue to see more customers, there's going to be more orders across the board. Riot will have increased deal flow with Anthropic, Databricks, ClickHouse, Nebius. Like, point to the direction most of these companies in the world will have partnerships with one of the largest and honestly probably the greatest company story ever of all time would be Anthropic if they end up 10xing once again. Now,
yeah, I'm pretty excited about that. Just for the numbers, like you're saying, to be able to really finally able to see and not just speculate on reports or just random press releases that they may share here and there.
I was just going to add, they might end up IPOing as early as September or October. So like we might get proof, SEC backed proof of some of the numbers that they end up showing off. Now that doesn't mean, as you know, that they show off $100 billion of revenue. It means that the last month that they end up showing off is going to be somewhere around like 8 billion or something like that of the last month, 8 or 9, whatever that math is. But wild. From nothing, like a startup of a 2017 startup.
Yeah. Look, I mean, I am curious about that ARR because obviously right now, and I feel like a lot of, I don't know if, I only say bears, but I don't think bears is the right term to go. They do make that note that obviously right now, all these companies are showing ARR, but some of these companies might slow down. I don't think that's the case, but what happens when there is kind of this big slowdown, or it's weird to say that I twitch because I don't think it's going to happen, but when you see kind of a slowdown in ARR versus a quarter ago,
Well,
I'm
I
curious
you know what? We're looking at Nvidia was $200 whenever they had 30 billion in ARR. So what happens if they slow down? Like, I don't know. We got to get cut by 2/3 before we get back to where we were, and Nvidia still hasn't moved. So I don't think it's what happens if we slow down. It's what happens if it remotely stays where it is, because I think that people are already discounting it.
Well, Tanner, I saw another article that I wanted to get your thoughts on, and the Nebius news. I'm pretty sure you saw that.
Yeah.
What thoughts on it, especially since management said things were okay with it, even with the power solution, but now it seems like that's the power. The way I read it, and maybe I'm just horrible at reading, so maybe you can correct me. But the way I read it was like the stop was including that Bloom Energy solution that they haven't tried to do as the workaround for some of the other hurdles that were happening. So they're like, this was the fix, but now it seems like the fix is being stopped. Is that how I should be reading it?
Well, I don't know 100%, but
yeah,
I have it here. It says they halted Bloom Energy's fuel cell work after the city required approval and permits that have not yet been obtained. Data One, which works with Nebius, said that the pause is temporary and should not even impact the project timeline. So if that is the case, and
they respond, they responded to that already. Oh, yeah. Perfect. Okay.
Yeah, they said the pause is temporary and should not affect the project timeline. That's why it's not like really down. You know, there's still skepticism, and you don't want to see 2 in a row. But like, we didn't lose the 34% gain that we ended up seeing through earnings. We're back down to insane levels of 252, which we haven't seen since yesterday.
Yeah, I mean, and I think this is why it's important to, like, if you own a company, to truly follow it so you can understand it kind of, because I wasn't like, I didn't take this as a scary moment. And I think in the data center space, this is going to be a new normal, where you are going to see reports of potential delays. I mean, we had it with CoreWeave where it actually was a delay, but then you also have reports of other delays a few quarters ago. And it's just, these companies are now under such a microscope that any little thing becomes a major news, and it could create a lot of volatility for the stocks when it might not even be new news like what we just saw today. So I think this is what adds volatility to some of this sector.
Any little thing is going to be all right. Okay. So sorry, guys. I apologize. Jose always brings the silly out of me. I mean, he's a fun guy to be around. Okay, so did you see Jensen Huang respond to CoreWeave's A100 working through 2029 comment?
No, I did not. Was it a video of an X post? Is he posting? Was it?
The mighty A100 fleet are mission capable from 2020 through 2029. NVIDIA computing is more than chips. CUDA gives developers and NVIDIA engineers a common platform to continually upgrade Ampere, Hopper, and Blackwell throughout their useful lives. CUDA makes NVIDIA computing versatile. Versatility makes it fungible. Fungibility drives utilization and extends durability, making NVIDIA compute a productive asset, rentable, durable, and financeable.
Yeah, I mean, for NVIDIA, that news came at a perfect time, right? Because they just had that $500 billion partnership or financial investment thing. And one of the big points that NVIDIA is trying to make to the whole financing world and with its partners is GPUs back then were saw as an asset that used to depreciate over time. The revenue collected over time was a lot weaker or over time. So if you were a lender, your risk would be a lot higher. And that's why rates tend to be sucky for some of these neoclouds. But now the new story, and it is playing out, there's data, is that these GPUs don't depreciate like the market is risking them that. And the revenue is not as volatile as the market was pricing it at. So I think this adds more to if you're able to show I have an asset that now can live through 9 years. The value of that asset doesn't fluctuate as much. The revenue doesn't depreciate as quickly. The banking companies themselves can go and say, oh, actually, I can give you a better rate because, God forbid, something happens to you. I can take those GPUs. I know the values are still going to be strong. I can sell them. I can wholesale them, or I can work with another partner and be able to make my money back. Now, my risk of lending you this money to build GPU infrastructure has become lower. And for that reason, I can give you a better rate. So I think it came out at a perfect time. I wonder how, but it's 9 years of the Ampere is going to be crazy.
But do you expect 9 years for the Hopper?
I think so. For me, the one I expect a longer lifetime is the Blackwell. I think Blackwell is going to last longer than the Ampere and the Hopper because of the NVL72.
Mm-hmm.
The ability to connect 72 GPUs together, I think is if you're able to get this much asset of something that you were only able to connect. I forget Ampere. I don't know if Ampere you were able to do 8 GPUs like you were with the Hopper.
Yeah, was A100's even rack scale? Like, how did that work?
Yeah, I don't remember. I think if they were, it was 4, maybe, if that. But even if it's 8, like, I think Blackwell is the usefulness life of a Blackwell is gonna surpass what the A100 or the Hopper go through.
Yeah. Which is crazy that the A100s are last. And by the way, this is not like, I think that people are jumping to conclusions talking about that they now have a 9-year lifespan. It's like, we still don't know if at 9 years, that's the end.
Yeah.
Like, this is just the latest data that we have that customers are signing to 2029. What happens if we sign a customer next quarter or the year after that goes to 2030? Do they now have 10-year lifespans?
And you know, as we get more solutions in the market, like what happens if robotics or I don't know, just some random not robotics, just some random market game development increases in AI solutions. They might not need the Hopper or the GB200. So as new markets come in, they can say, I can test out these AI solutions with the A100. So right now we haven't touched every single market. So I agree. I think the usefulness of the Ampere is going to be the actual life cycle of how long the GPU itself can physically survive. Like, I don't know if we have any data or if Nvidia has any data that after 10 years, the reliability of the A100 starts to die down. Do they have to start having more maintenance issues?
They stop updating it.
Yeah.
It's like an old iPhone.
Yeah. So I think if we start to see, and maybe if we start to see Ampere's lifetime down, it's not because of the demand. It's more of just the product itself finally kicking away.
Yeah. Did you hear about the OpenAI's model ultra fast 5.6 Sol?
They have Sol in ultra fast
for specifically with Cerebras.
Wow,
what they're now about to leak. 5.6 Sol ultra fast, 750 tokens per second or something like this.
That is pretty interesting because I thought with Cerebras, one of the things is they really were only focusing on the smaller models, right? I think originally it was they only were using it on Luna. But for them to be doing it on Sol, I don't know if it says it says a lot about probably Cerebras potential. Interesting.
So here is a video that OpenAI just published. Here is 5.6 Sol ultra fast, and then on the other side, 5.6 Sol standard. My understanding is Cerebras is the left. And obviously, can get work done a lot quicker. Yeah. So, is this a bullish sign for Cerebras? And do you look at that stock at all?
I actually own that one. Not a big Cerebras plays into what my Marvell used to be. So I still own Marvell, but Marvell's starting to play out. The thing is, we are in such a compute constrained market that smaller players have a huge opportunity to win in just form of price reaction. It's not necessarily that Cerebras is going to take any market share. It's just that with the compute constrained market, people are forced to look at you. And if they start working with big players, it opens up a big opportunity. So if they continue to do this with OpenAI, I mean, I believe OpenAI will continue to be one of, not the, but one of the top frontier models. So if that's where the demand is and they see opportunity here with Cerebras, they're going to continue to place orders. But I wouldn't YOLO a whole portfolio on it. It would be kind of like Cerebras is one. My call spaces, I think, was like 202 or 203 on that one. So it's nothing crazy in forms of wins right now, but I like it and it's a risky one. But this opens up that new opportunity. I don't enter that super fast. Many people are going to be like, oh, you're going to do super fast, but that super fast model is coming at a premium cost. This is what like Nvidia was talking with the Vera Rubin Hopper, Vera Rubin and Grok solution. You're going to have a cheap model, you're going to have cheap tokens, you're going to have medium tokens, then you're going to have like ultra, then ultra premium, then insane. Like I think this is going to be an ultra premium. There's going to be a company is going to pay for faster tokens at a faster time if it comes with better intelligence, or they might just do the non-ultra fast. It's just a different types. And I would say margins of ultra fast are going to be extremely high, but only a selected amount of people are going to want to use that because of the cost that comes with it. Yeah.
Yeah. Do you want to order priority delivery on your Uber Eats?
Exactly.
On your tokens. Mm-hmm. Okay. I think that's for the most part. Is there anything else that you wanted to touch on today? Nvidia earnings coming up?
I think we can save that for in a few weeks. That's going to be fun. I mean, I think guidance is going to be crazy. Yeah, I think I don't know. I don't think the market is prepared with how crazy Nvidia is going to do in revenue in the upcoming year.
We got a we got Chinese sales this quarter, right?
I don't think we did. No, we may be. I think if very limited, if any.
Yeah, Workday is for anyone looking at Workday or any of the software names. I'm sure Jose, you say SaaS, he doesn't even know what's happening in this world. But
like every day's a Workday.
Yeah. Workday is up about 19%. It was up even more than that. I forget the firm. What was the firm that anyway, they're talking about doing a
Silver Lake
potential $43 billion buyout. You do pay attention to these names. ServiceNow and a lot of these other SaaS names are catching a little bit of a bid because of that. Do you own any software? Like how does I know you're the semi guy, but how do you diversify outside of that, if any?
If any, I index, SPY, and Qs, and then I would say the mags, if you would call that diversification.
Definitely, yeah.
Yeah, but I it's like within the AI trade, there's different ways. Sometimes I might enter the SaaS market. I do believe the SaaS market will reawaken, and it has reawakened right now, but I still believe there's just so much opportunity in certain industries in the semiconductor space. So once I stop looking, I feel like maybe opportunities that SaaS would be my next one. Just because it follows the chain just right. Where's AI development going to really improve, and it's going to happen into software layer.
Can I ask? I actually forgot to ask you a really big question. AMD raising $5 billion. What did you think about that?
I did not see that.
They raised $5 billion worth of debt today.
Really?
Yeah.
My only thought that I would think that they are doing is they want to
plans to raise up to $5 billion by selling debt.
Yeah, to me, is they want to make contracts with neo cloud players, or PowerShell companies, just so they can have that opportunity. So two things: either one, they want to reserve power so they can sell it to whoever they need to, because there's no point of you having a Helios rack system if your customers can't find a data center to put it into. So let me reserve these lands, these neo clouds, these PowerShells, because when I sell you this chip, I already have a location for you to put it in. So that's the first thing I would think they would be doing it. The second I would say is just they're trying to expand their supply chain even larger due to high demand. That would be the bullish take for me. Like if I was an extreme bull, it's just, hey, you need to increase your supply chain dramatically, either on memory, on everything else. And it doesn't mean they need that supply right now, but I wonder if some of their suppliers are looking for longer terms on that supply, or they want to be longer. They want to say, typically we only reserve 2 years, let's reserve 4 years this time, to make sure. So it has to be something with the supply chain market.
Okay. Speaking of debt, one of the big companies that you have that's really focused on debt is CoreWeave. My question is there a certain level of debt that would make you feel uncomfortable?
To me, no, because I mean, the way they worked on these contracts, the easiest, if you're going to take out a mortgage, right? Just easiest way to think about it is if you take out a mortgage, you can math is math at the end of the day, right? If you take out a mortgage, you know what your payments are going to be for the next 30 years, monthly, on a monthly basis, right? You can see it. These companies obviously know what their payments on all this debt, on interest, like, it's not like, oh, let me just take off this interest and now eventually pay it. No, it's part of their model, right?
Yeah, but some of it's variable.
But I guess luckily for them right now, pricing has increased dramatically on GPUs. They have stated that for their business to be successful, they don't need to recontract. That to me is a big win. And I think you stated earlier, it's the same for all the other players as well, right? It doesn't, but to me, I feel comfortable. If you're raising debt, it's because you have a long-term customer agreement that's going to pay these 5 years. I personally believe that token demand is going to continue to increase for like at least within that time frame. But if I was worried about that, yes, I think that would be extremely scary.
Got you. Jose, brother, thanks for coming on. Short notice. Good commentary. Really, always do appreciate your commentary on names like CoreWeave, Nvidia, AMD. That's why you're the CoreWeave connoisseur.
Yeah. But hopefully we hit some crazy levels. So
yeah,
I'll be pretty excited. All right, man. Appreciate it. Take care. Chat. Appreciate you guys. You guys are pretty fun. So
they're very funny. The stash is fake. Yeah. Well, that was the semi-stallion, the CoreWeave connoisseur, the Nebius noble. He is the great and powerful Jose. Ladies and gentlemen, that marks the end of the episode. I will not be covering dLocal. I will not be covering Nubank. I wish the best for both, but I've got other things to do. Hopefully, if all goes well, I will be on later tonight to discuss those stocks, or even tomorrow, I will be able to cover them tomorrow at 1. If you guys haven't already, if you're new to the channel, consider subscribing. Till next time. Bye for now.